You got to remember, this is like way before, the ramp up in 2017 and late 2017. And I remember having a few conversations with people at the bank saying, have you heard about Bitcoin and blockchain? And the response that came back was, oh, yeah. Only to realize that really people didn't understand what blockchain technology was, nor what Bitcoin was, etc. And so there was a lot of resistance within the bank. Ultimately, once we had something to launch, we actually built an exchange in a bank. And then once we were ready to launch, the appetite wasn't there to launch it. And that's kind of what led myself and a couple of my co-founders to leave the bank to start Valor. But ultimately, with regulations and people not really fully understanding what crypto was, I think it was just a step too far for a large institution that, to take on the risk of what this new kind of world was at the expense of, giving up maybe potentially a banking license if they didn't do it correctly.
The story that a lot of banks go down is they build these pilots internally and then they get it to production, and then it's like, okay, well, who's the users? And it goes up the chain, and then they're like, well, we can't exactly go to retail as a bank. So I guess, I don't know what we do with this crypto exchange thing that we built internally, maybe shelve it. And that's been the fate of quite a number of things.
Yes, so we had the core team in place, which is myself and a couple of my colleagues from the bank. We did not have investment, we did not have savings, and so I think that was probably the most nerve-wracking part of it, is to actually build up the courage to actually leave, to face failure, which is the most probable outcome when you're starting a new company, but at least giving it a shot. And that's what we did. We were lucky enough to get an initial investment from. We were based in South Africa at the time. South Africa only had one major exchange that I think had about 95% of the volume. At the time, it was only offering Bitcoin Rand, which is the local currency, South African Rand pair, and the fees were exorbitant. So to give you an idea, the maker fee was 0%, the taker fee was 1%.
Okay.
So 100 basis points, which is the taker fee. You'd have these huge walls of bid-offer spreads on the bid and offer, and everybody was just waiting to hopefully be the maker rather than the taker. So we looked at this and we said, A, we've got to get more assets to the local market. B, we've got to get much more competitive fees. And so we introduced a really competitive fee offering. At the time, it was negative 10 basis points as the maker fee. So we would pay our makers 10 basis points, and it was 20 basis points taker fee. It's since compressed since then. So we're at we still have a negative maker fee that we pay our market makers, and then we've come down quite significantly on the taker fee. And so we launched with that. And, to my surprise, on our first day, I was hoping to maybe get 1 or 2 Bitcoins worth of volume. We actually hit, I think, 50 Bitcoins of volume that first day.
Amazing.
And then slowly, we kind of ticked up. We're now the largest exchange by volume in South Africa by quite a significant margin. So on any given day, we're probably between 50 to 70% of the entire market in South Africa. But more recently, and we'll get into this, is that we have our sights set on the global scene. And so we've just recently launched perpetuals, spot margin trading. So a lot of the products that we really hope to provide to an international audience, dollar on-ramps, USDT pairings, etc.